can the IRS take money out of your savings account as opposed to a checking account? Well, let's look into the issue here. And where I'm going to start in answering this question is by looking at a levy notice that the IRS would issue to a bank, in this case, TD Bank, okay? Because our client who came to us, and I've obviously redacted our client's name here, had already received sufficient notice of intent to levy, right to a collection due process hearing, etc., had not responded to those things, and now the IRS, the revenue officer he was assigned to, was now taking levy action against him. And so he sent a notice to TD Bank, right, which one of the banks that the client banked at, saying, hey, your customer owes us $313,000, right? And the instructions to the bank are that they must hold the money for 21 days. There's a 21-day freeze period before they can actually send it to the IRS. And that 21-day period is crucial because that's when you can actually save your money from going to the IRS. Okay, and that includes any interest earned during that time. Okay, now it doesn't specify in here, checking account, savings account. Now it does say the levy does not attach the funds in IRAs, self-employed individual retirement plans, or any other retirement plans in your possession or control. And it doesn't exclude savings accounts, okay? Now, what the actual code says down here, and by the way, if I didn't mention it, levy just means when the IRS takes your stuff, right? It basically means taking your stuff, typically like a financial account or some kind of intangible thing, as opposed to seizure, which they usually use to refer to the taking of a tangible asset like a house or a vehicle or something like this. But they do say down here, under special rule for banks, okay, any bank, as defined in section 408N, shall surrender, what does this say? Any deposits. See that? Any deposits, okay, including interest thereon in such bank only after 21 days after service of levy, okay? So I guess what I'm saying is here, there in the IRS's eyes, there's no distinction between your checking account and your savings account. Okay, that's kind of a distinction that banks make, right? They want to encourage people to, yes, use their bank for their monthly, cash flow needs, but they also want to encourage people to save money at the bank long term, right? In exchange, they pay them some interest. It's typically not a whole lot of interest at the big banks, right? There's high yield savings accounts that can get you, more interest. I personally just, we're using a Fidelity account, right? That's in a money market fund where, it's earning 5% yield right now as kind of our cash management account. Anyway, that's kind of getting off course here. But, gosh, what did I even say? Yeah, well, banks want to encourage people to save money in the bank too, right? Because the more money the bank has, right, the more they can lend out, typically at a very high multiple of their actual deposits, right, if you know how that works. Right, so they have this thing that's called savings accounts, right, which are meant to encourage their customers to save long term. So, but in the eyes of the IRS, all the same thing. It's a deposit, it's cash, and they view it as their cash if you haven't paid your back taxes. Okay, but there are ways out of if you're facing an IRS bank levy. Please watch my video on IRS bank levies. You can click right up here to the top left-hand corner of your screen to access that video. If you'd like to schedule a free consultation with us here at Choice Tax Relief, give us a call, 866-8000-TAX. That's 866-8000-829. To do so, you can also visit us at choicetaxrelief.com. Fill out that form on the homepage, and we'll reach out to you. Thank you so much for watching, everybody. I'll see you in the next video. Bye-bye.